On behalf of the entire Sterlite Tech team, I would like to start off by wishing all of you a very happy new year. I trust that all of you have had an opportunity to go through the result document which was shared earlier today and are also available on the website. I will start off by covering the overall industry landscape, business performance, and some of the key developments, following which Anupam will walk you through the financial performance. I will first start with the industry trends and outlook. As is evident on this slide, the industry outlook continues to be very bullish, and all forecasts indicate acceleration in data consumption globally by many folds in the years to come. Cisco's Virtual Networking Index study indicates that growth in data consumption is set to sustain, given that the scope of connectivity will only get wider and deeper in the future. Early estimates already indicate that global IP traffic in calendar year 2017 was close to 1.5 trillion gigabytes. In addition to a higher proportion of the population gaining high-quality access to the internet, the evolution of the device ecosystem as well as trends in internet usage, which will drive per capita usage higher, are combining to elevate global data consumption into a higher orbit. The rapid growth in data consumption is being fueled by multiple vectors. These factors will cause a sharp explosion in the number of connected devices and further escalate bandwidth requirements. So you have 5G networks being developed by multiple organizations across the globe, while there are a variety of players innovating within the Internet of Things ecosystem. There is already immense change in the functioning of the enterprise, while smart cities technology is on the cusp of making big leaps globally. What is certain that these multiple applications covering all aspects of everyday life will push exabytes of data onto our networks, necessitating faster transmission. Connectivity will have to be seamless, invisible, and instant, and network requirements will be stringent. No buffering, no lag, no clogged network will be the norms of tomorrow's network. In the next few slides, I would like to touch a bit on some of these growth drivers. 5G is undoubtedly the next big thing on the global telecom and data arena. 5G trials are currently being rolled out across the world. Companies such as Orange, Verizon, Google, Samsung, Ericsson are already deeply invested in this technology, and trials are now planned across the globe in coming years, including in the current year as well. 5G as a technology not only promises higher data capacity, faster data speeds, but also possesses the capacity to connect billions of devices. According to industry estimates, 5G will also bring down the cost of transmitting packets of data on the network to 1/10 of that on a 4G network. The technology is also expected to trigger progress across usages such as autonomous cars, apart from Internet of Things. The second growth driver is the enterprise itself. It's the changing contours of the global enterprise. Modified hierarchical structures, new models for employee and customer engagement, heightened information exchange, and collaborative functions are built on a foundation of better connectivity. We are witnessing an increasing footprint of hardware such as workplace robots, 3D printing, wearables, sensors, which cover multiple aspects from efficiency, safety, environmental protection to security within the enterprise. As the penetration of the enterprise apps, cloud penetration, automation, and big data increases, there is going to be a sharp rise in the per capita data consumption by enterprises. The third growth driver that we are seeing globally is smart cities. Smart cities leverage technology to serve people and in process bring sufficient systems to manage our cities. It is the analytics together with IoT which are basically turning ordinary towns into a smart city. With the development of meters and sensors and the integration of real-time information from citizens, vast amount of data will be generated. This data, coupled with insights gained from analytics, will make sure that the city's water is clean, transportation is reliable, neighborhoods are safe, and the city is much smarter about the way it uses the energy. This would be another key driver for high amount of data layers being built riding on high bandwidth super fast networks. And the fourth growth driver which we wish to talk about is IoT. The Internet of Things is removing the separation between the internet and our physical world. In the past, many IoT or machine-to-machine communication application transmitted small discrete amount of data on a regular basis. But now, more advanced IoT applications are demanding high data rates over LTE connectivity. Going ahead, virtually everything that can be connected will be connected. The combination of increasing bandwidth, sensor technology, and artificial intelligence will trigger an explosion of ubiquitous connectivity. And now moving forward, we'll talk about how optical fiber continues to be the foundation for all the digital transformation, and which is closer to where we operate in. This slide we've talked about, as network requirements inch upwards, optical fiber is clearly emerging as the future of digital communication. Optical fiber enables transmission of images, voice messages, and videos at the speed of light. It has a tremendous advantage in terms of speed and distance, which no other alternative technology available can match up to. There are other advantages too across aspects such as security, latency, strength, resistance, ability to withstand extreme conditions, etc. Given these multiple benefits offered at fairly competitive costs, we foresee that optical fiber will remain the preferred medium of data transport, and there is no technology today which can replace the speed, throughput, and latency performance of fiber on any standards. Based on past data, the closest proxy one can see for fiber demand is the data growth globally. We've added the 2017 data also in this chart, which we show to you every quarter. With data consumption continuing to show an upward trend, it gives us good confidence on continued growth in fiber demand for years to come. This chart shows captures the global fiber demand over more than a decade, which has shown growth on consistent basis. As per the latest estimates of 2017, the demand continues to outpace the supply, which has kept the availability of fiber tight, leading to extended delivery timelines. What is very encouraging is the fact that this demand is driven by all major geographies, including North America, Europe, China, India, which have demonstrated growth on year-on-year basis. The last few years have seen bulk of fiber investments being driven by a shift towards faster fixed line access networks and fiber backhauling of 3G and 4G sites. As we step into 2018, we see 5G mobile network infrastructure to become a very big driver and equally important contributor of fiber demand as FTTX. At Sterlite, we are uniquely positioned to deliver the smarter networks for today as well as tomorrow. On the backdrop of this massive digital opportunity, we at Sterlite Tech remain very bullish at the prospects. With our unique positioning globally as the only silicon to Sterlite player, we bring our customers an array of optical transmission products with service and software offerings which are integral components of future data networks. With a fully integrated manufacturing platform starting from bare silicon, extending up to the application layer with our software products, we are not only able to derive industry-best margin structures, but also engage at the network design and creation stage with our customers as they plan for next-generation networks. Over the last few years, we have invested deeply in people, in processes, and in technologies in building end-to-end data network creation capabilities. With these new capabilities, we are now uniquely placed to engage with our customers at the network design stage and become the trusted partner for an end-to-end rollout and post-execution management to deliver best-in-class network performance. In this slide, we talk about how technology is at the core of our offerings. It captures the unique position we have built for ourselves as we get ready to embark on the growth journey. This position has been built upon advanced capabilities and technological expertise developed over the years that continues to differentiate us from other players. Using technology as a key lever, we are able to serve the diverse and evolving requirements of our customers across 100 countries and executing challenging projects in some of the world's toughest terrains. I would now like to share some of the important business highlights of our last quarter. Backed by a strong focus on research and technology, we filed 7 new patents in this quarter, which takes our total patent portfolio to 169. As announced in the beginning of the year, we are now embarking on the next phase of fiber capacity expansion from 30 to 50 million kilometers. This greenfield expansion, which is going to be undertaken in our Aurangabad location, received the necessary approvals from the Ministry of Electronics and IT and was accorded ultra mega project status as per Maharashtra government's industrial promotion incentive scheme. We are progressing well in terms of the overall timeline of the project and look forward to building a state-of-art manufacturing facility with all latest equipment and higher operating efficiencies. With our deepening reach in new geographies and our fiber portfolio offerings, our order book stands at an all-time high of rupees 4,573 crores as at end of Q3 of FY18. Amongst others, the Sterlite Tech Academy, which is one of its kind initiative in the country to bring global best practices in fiber deployment to local installer base, will be training about 2,000 youth from Jharkhand as smart optical fiber technicians. Amongst many accolades during quarter, we feel extremely honored for being recognized on multiple platforms for our CSR initiative, receiving multiple awards in that category. Sterlite Tech was also recently awarded with Best Connected City Deployment Award for successful deployment of India's first live smart city services in Gandhinagar. Since going live in December 2016, this smart city services project has brought transformative changes in the everyday lives of its citizens. This global honor is an acknowledgement of our expertise for our project, which has set a global benchmark for future-proof, smarter digital infrastructure development. We talk about our sales outlook. We are happy to report yet another strong quarter from order booking point of view. Our order booking now is at a record high levels of 4,573 crores, representing almost a 70% growth on a year-on-year basis. This order book is well balanced across the global as well as the Indian segment. In addition to this, our order book maintains a healthy balanced mix between our products and services segment. We continue to strategically enter new markets and regions to enhance and elevate our presence and build customer relationships for the future. In the current quarter, 60% of our revenues have come from the export market, witnessing a significant 78% year-on-year increase. With this, I would now like to hand over to Anupam, who will take us through the financial highlights for the quarter.
Thanks, Anand. This slide provides us the highlights of the quarterly financial performance trend for the company on a consolidated basis. As you can see, we have delivered a strong growth in top line, margins, and the bottom line. Revenue for the quarter stood at Rs 836 crore, registering a 14% YOY growth. EBITDA grew 44% on year-on-year basis, driven by the growth in the product volume and supported by the project execution progressing firmly on quarter-on-quarter basis. Our profit after tax for the quarter stands at Rs 90 crore, registering a massive 83% growth year-on-year basis. This slide brings you the concise version of P&L for 9-month FY18 compared with 9-month of FY17 and also with full year of FY17 performance. At about 23%, our EBITDA margin continues to be best in the industry. As you can also see that our 9 months performance on most of the parameters like EBITDA and PAT has already surpassed full year FY17 numbers. Another important KPI which we monitor and report, ROC for 9 months FY18 stands at 29% and remains a key metric for our future growth. We continue to have a very strong focus on the balance sheet even as we plan for scalable growth in all our businesses. During the 3 quarters of FY18, we saw a net cash generation of about 80 crore after capex and taxes. We remain committed to keeping the debt to equity ratio below 1, which currently stands at 0.8, down 35% on year-on-year basis. Going forward, we will continue to elevate the trajectory of growth and cash generation to strengthen the balance sheet further. We continue to be extremely focused to keep our balance sheet light and improve our return ratio as we plan for the growth. Let's look at the 5-year journey in the past. This slide is a reflection of our past performance in the telecom business. As you can see, we continue to demonstrate healthy growth in our business profits with superior return. On 5-year CAGR basis, while the revenue growth was 24%, the EBITDA growth was almost 38%. The ROC profile of the business has also improved over the years and now operating at plus 25% range. At Sterlite Tech, we strongly believe in focusing on triple bottom line. We strongly believe that the only way to do business is by being responsible, socially and environmentally. When it comes to the CSR, Sterlite Tech has taken great strides over the years to safeguard the well-being of its community. In recent times, the company revamped its key CSR projects in education, health, women empowerment, and rural and community developments, with focus on creating 360-degree impact. This brings us to the end of our initial remarks, and I would like to hand it over to the moderator for Q&A session.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We will take the first question from the line of Snigdha Sharma from Axis Capital. Please go ahead.
Great. Thanks for taking my question. First of all, congratulations on a brilliant set of numbers. So I have 3 quick and short questions. One, if you can give an update on the capacity expansion and how is that translated into volumes for us. Secondly, if we can discuss the puts and takes on margins, we've seen a very good improvement there. And thirdly, if you can provide some more color on the order book.
Sure. Thanks. On the capacity expansion, the project of 50 million kilometer is on track and will start seeing, and it will be finished by June of 2019. And we'll start seeing volume increases from then. In terms of margins, what we have seen in the current quarter, it's been relatively more on the product end, and that's why you see a slight margin uptick quarter-on-quarter perspective, but we will be in the 22 to 24% range, which we have guided earlier. In terms of the order book, it is, as we have said, about 4,500 crores. Out of that 4,500, it's about 3,200 crores is on the product side and about 1,300 crores is on the services and software side. So about 70-30 breakup.
Yes, sorry, sir. One on the margin front, can you give us some more, color on what drove the margin in terms of if we can talk about the breakup on the volume and realization front, both in OF and OF3, would it be possible to share that?
On the margin front, as we have been maintaining that we have a great operating leverage on the optical fiber business. So there is quarter on quarter we see some operating leverage getting better. And as we had mentioned a couple of quarters ago, we have done long-term contracts and the pricing is slightly getting better. And the proportion of product business as compared to the total business is slightly higher. So it's a mix of all of that which has created this quarterly margin improvement.
Okay, great. Thanks. I'll be back in the queue.
Sure.
Thank you. We will take the next question from the line of Pranav Kshatriya from Edelweiss Securities. Please go ahead.
Hi, thanks for the opportunity. Sir, my first question is regarding, order book. So this order book is primarily from the product business. Can you help us understand, which geographies have contributed more to the order book increase, and how do you see the growth from different geographies? So that's my first question. And secondly, can you comment on how the execution in the services business have been, and how the growth in that business have been? And services business, the order book is seem to be plateauing at the current level. And how do you see this going forward?
Sure, Pranav. So on the order book front, the bulk of our sales is it's a reflection of our sales as well. Bulk of our sales continues to be in Europe and China, and our order book is also a reflection of the longer term contracts that we are doing in both of these geographies. In terms of the second part of it, what you spoke about, the plateauing of the services. Services is essentially, as we have talked about, is more on the project side. So when we are getting smaller orders, which is essentially from either telecom providers or smart cities, and the big shift happens with larger project orders, which we are yet to see. So on a proportion basis, our order book is at a 70-30 sort of a ratio, which we are currently comfortable with.
Sir, any color on, you might not have booked something in the order book, but on the services, you have any visibility on the bid pipeline, how it is looking, versus how it was, let's say, a year back?
The bid pipeline overall, I would say, in terms of the magnitude would be similar, but in terms of the attributes of various players, it would be across. So we have bidded for projects which includes smart cities, which includes defense, which includes creating the network for telecom providers. So in terms of diversity, I would say it's a good pipeline, and we should start seeing some macro orders over the next 6 to 9 months.
Sure. Thank you so much. That's it from my side. Thank you for answering questions.
Thank you. We will take the next question from the line of Alok Deora from IIFL Wealth. Please go ahead.
Good evening, sir, and congratulations on very good set of numbers. So just a couple of questions I had. One was on the capacity utilization front, like we are operating with around 30 million fiber kilometer. So are we operating at around close to 90+% sort of utilization at this moment?
Yes, Alok, we are actually operating very close to the capacity utilization. I mean, we had achieved this rate almost 2 quarters ago also, but now we are able to achieve at almost close to 100%, but with more value-added fiber. So almost 22-23% of what we are producing is higher realization value-added fiber.
Right. And in terms of cables, I mean, we were at around 15 million sort of capacity. So that was actually, we were doing around 6-7 million. So have we seen any good traction on that part?
Sure. So as we had guided earlier, we would be closer to 70% of the capacity utilization this year, and next year should be more closer to 90%, for which we have a good visibility.
Right. And one question on the services part, like have we won any smart city projects recently? And in terms of BharatNet, are we looking at any orders coming through with the phase 2 starting now? It's just starting, I think, in a couple of months' time. So are we looking at any significant order flow from that front?
Alok, the last order for smart cities that we won was for Kakinada, that we talked about, I think, in end of Q1.
Right.
We post that we have made a few bids, so we'll get to know the status of that either this quarter or next quarter. BharatNet phase 2, you are right that the cabinet has approved that spend, and what we are seeing essentially that spend several tenders are getting drafted between cable tenders, between services tender, both centralized as well as the state kind of tender. So we believe that between now and June or July of the current calendar year, we'll see a great amount of activity in terms of some of these requirements getting firmed up, and we are pretty much in fray for these tenders for the fiber and cables part.
Right. Just one last question. We have seen a significant improvement in the margin, which is coming close to 23-24%. So going forward also, the product business, which is typically the highest margin, would be a larger contribution to the top line. So these margins would be sort of sustainable for next couple of years, or would we see any sort of pressure on that?
See, the margins, as we have all the time maintained, that we operate in almost 4 different business segments with different margin. So we have fiber, we have cables, we have services, and we have software. And the resultant margin is a reflection of the mix of the revenues that happens for the current quarter. So we would be happy if we are in the range of 22 to 24%. Some quarterly blips either way will keep happening, but if you see the 9-month range, we are at 23% range, and that's a range we would like to continue to maintain and drive.
Right. Thank you. That's all from my side. All the best.
Thank you.
Thank you. We will take the next question from the line of Jigar Shah from Maybank. Please go ahead.
Good evening, Dr. Anand, Anupam. Congratulations on once again surpassing expectations. That's a great habit, and I wish you the best to continue with that. My question pertains to your presentation gives a good idea about where the industry is going in terms of consumption, and that gives me the that gives me the impetus to ask the question that the data consumption in India should lead to the new network creation by the telcos. So the current order book, does it include any of such orders for the creation of the data networks, which I believe you have the capability?
Thanks, Jigar. Overall, the current order book that we have, as you see, is a large part of the order book is on products, and a large part of the product order book is global. So the India part, in terms of the India telcos orders for products as well as BharatNet, is yet to kick in. In terms of services, on our own choice, we are doing small contracts for a couple of telecom providers in creating their mobile backhaul for tower connectivity. Wherever we are able to do justice to our set of capabilities of designing and building reliable long-term networks, we are engaging with a few telecom providers. It's currently not substantial, but we believe in the next 9 to 12 months it can be something substantial.
Okay. And is there any number that you can provide in terms of the bids that you may have in place at the moment?
The overall bids that we have between services and products would be in the order of 12 to 13,000 crores.
Okay. And the other thing is, on your expansion, you mentioned that you have received certain approvals. Now, does this mean that if you are under an ultra mega project or something, you are subject to certain amount of quantified incentives? Can you quantify them if it is the case?
It's essentially on the state side, it is things like you get subsidies for power, water, land, etc. It's definitely not significant in a quantitative manner, but what happens is we get a single window fast clearance, and the entire project is under a very super fast clearance from a state perspective.
Plus quality of power.
And the quality of power, so 132 kV connectivity and all that starts happening. And the same happens at a center level. So this is a prestigious project for Ministry of Electronics and IT. So on all those fronts, it becomes much easier for us to move forward.
If I may squeeze one small question, I mean, now that we know the roadmap up to 2020, I think things are very clear for your growth. Anything further on the post 2020? We also saw recently, I think, an acquisition by the group or your owners in the glass segment in Japan. So, are there any other thoughts beyond the current priorities?
No, Jigar, we are currently very, very focused on what we do. We believe we have the industry that we operate in has great opportunities. The portfolio that we have chosen for ourselves of product, services, and software has great opportunities. The customer base has great opportunities. So we're very, very focused on what we do, and we are extremely excited about what we are doing.
Okay, sir. Thank you very much, and all the best.
Thanks.
Thank you.
Thank you. We will take the next question from the line of Rahul Singh from Ampersand Capital. Please go ahead.
Yeah, hi, good evening and congrats on excellent set of numbers. I have two questions. One is on the margins. You mentioned briefly that because of certain contracts, the pricing has turned better. So just wanted to get a proper understanding of that and whether that pricing environment is going to sustain beyond this quarter. And number two, on the capacity expansion from 30 to 50 million fiber kilometer, is it going to be in phases or is it going to be in one shot by June 2019?
So, Rahul, on the margin front, clearly, as we have said, that it's a mix of both the pricing as well as the value-added products that we are supplying. So for 2018, I can say that for the product business, we have a great level of clarity. End of 2018, the pricing, all these contracts have a provision of volume and pricing negotiation within a range. So maybe around this time in 2019, we can talk more about it. The project currently has a bit of a modular part of it, which we are trying that by early 2019 we start seeing some benefits of the project, and by June 19 the full project starts established.
Okay, and just one quick follow-up. With this pricing environment being favorable till 2018 and at least, what is it being driven by in terms of the global demand supply? What exactly is driving that? And if we can just try and understand that, that will be of great help.
So globally, clearly, I mean, the macro driver continues to be the data growth. Within that macro driver of data growth, a lot of the telecom providers are starting to prepare for 5G connectivity, and as they prepare for 5G connectivity, the fiber is going much deeper, and the fiber count in the cables is getting much higher. So the fiber count in the cable, which typically used to be 40 or 50, now we are consistently seeing them 200 to 300 fibers per cable. We have ourselves come up with designs of 2,000 fibers per cable for the first time in this part of the world, and so the fiber is getting deeper and the fiber count is getting higher, which has created supply demand shortness currently, and that's why from a $7 to $8 range, it is at the higher end of that range that we always talk about.
Okay, thank you very much.
Sure.
Thank you. We will take the next question from the line of Harshit Patel from Equirus. Please go ahead.
Hi, sir. Sir, what would be the execution timeline for our services and the products order book, if you can tell that?
Harshad, at the current, the services order book would largely be executed in FY19. The product order book is currently for 19, 20, part of 20 and some part of 21 as well.
Yeah, Harshad, just to add one more thing, in the services business, we also have this 500 crore of AMC included, which will have a 7 year of execution. It's like 70 crore per annum kind of thing.
Okay. So, sir, how much execution for the NFS order would be remaining now?
Yes, about Harshit, we'll have about 300 plus crore kind of volume or revenue to be booked over next 9 months or so.
Okay, sir. So just a last question from my side. Sir, on the question that the earlier participant had asked, so sir, this capacity expansion, I understand that it would be modular. So sir, what would be our exit capacity at the end of, let's say, second quarter of FY19 or the fourth quarter of FY19?
Second quarter will remain almost the same. Fourth quarter, we are trying to see if we can reach closer to 40.
Okay, sir. Okay, understood. Thank you, sir. That's all from my side.
Thank you. We will take the next question from the line of Mukul Garg from Haitong Securities. Please go ahead.
Thank you for giving me the opportunity. Anand, first question from my end was on the pricing. I know quite a few people have already asked, but maybe if I can tackle it from a slightly different angle. In the past, you guys have mentioned that your average pricing is between $7 to $8. And if you look at spot market, it is it is much higher. And also earlier on the call, you mentioned that about 22% of your fiber is value added. So if you can give us any indication of what is the blended optical fiber price which you guys are getting right now, has it reached over $9.5, or is it still below that?
No, Mukul, it's currently closer to $8.5 or so. And as we said that for 2018, that ought to be around the range between 8.5, depending on how much value added that we do. And 2019 and beyond, it will be negotiated in the end of 2018.
Understood. And the second part, was on the India business. You mentioned first on the telco side that still most of the order book is coming from outside, and we can see a reflection of that in your current quarter revenues as well. Do you have any indication from the telcos that now most of their pain is behind them? Are they trying to be more aggressive in expanding their backhaul capacity, or is that something where visibility is still low?
So we clearly see, intent from all the three telcos is absolutely clear that every single 4G tower has to be connected by fiber. That intent getting converted into purchase orders is in different stages of evolution. So we are absolutely clear that this is something that will happen. We are in final stages of signing a few contracts as well. And I believe between Jan through June, we will be signing contracts with most of them.
Got it. And sorry, one question in relation to the first question. Is your average pricing also impacted by the the breakup between India revenues and international revenues? What I'm trying to say is that if you are seeing higher revenues,
really. So let me because the fiber the pricing is globally it's the same pricing. It's at import parity. It's air shipped everywhere. So there is no differentiation in India or global pricing.
Understood. And one final question, if I may squeeze in. On the BharatNet 2 order size, there is a lot of discussion on the decentralization and the concerns on, because the states don't have the money to actually pay out on the second phase. There is, the whole thing is getting delayed because of the inability to pay. What has been your interaction with the government, both at state and central level, and do you think that is going to be a concern unlike BharatNet Phase 1?
So this decentralization is being done along with money coming in from the USO fund, which is being governed by BBNL. So there is no current concern on funding or decentralization. Decentralization is done towards better control and faster execution because some of the states have taken the initiative of managing and monitoring the network themselves.
Okay. So, and some portion will still come from center?
All the money for connecting the villages, the scope of the BharatNet, which is between district and Gram Panchayat, all that money will come from the center.
Understand. Thanks. I think I will get back into the queue.
Sure.
Thank you. We will take the next question from the line of Sameer Padekar from ICICI Securities. Please go ahead.
Yeah. Hello, sir.
Hello, Sameer.
Yeah, congratulations for a strong set of numbers.
Thanks.
Yeah, so first of all, just wanted, we understand that we don't give the breakup of the revenues. Just wanted to understand, so is it fair to assume that a breakup of product and services revenues would be 75-25?
Yeah, in that range. That's right.
Fair enough. And if I were to see the kind of margins that we make in terms of product, so am I on the right path that we make upwards of 25% plus in the product segment, and while the services would be in the teens, right?
Yeah,
About 10 to 11.
Yeah, fair enough. I got it. So just wanted to understand in the whole scheme of things where we are looking at a $100 million kind of profitability in FY20, that would be an equal function of. I understand that the capacity expansion comes into picture from FY20, but your services would also be in the whole part of the vision that you're building in terms of the profitability building of the enterprise, right?
Absolutely.
So that's pretty much helpful. I just did I hear it right that 60% of the overall revenues were exports?
That's correct.
If you could clarify if it's a pure product or a combination of product and services?
Both product and software. So services we do only in India, but product and software we are pretty global.
So basically we're talking about the elite core part.
Yes, that's
right. Yeah. So elite core services, if we can get a sense, will like any other IT player, 70-80% of the revenues come from outside? Am I right, or is it on the lower side?
Yeah, it's about 70% global and 30% Indian.
Fair enough, sir. That was pretty helpful. Which means during this quarter we made 500 odd crores of export revenues, which again is, which was around 400 crore last quarter. So I think when we sell this kind of thing, so basically our driver would be raw fiber part or the OFC part in terms of the exports?
All three: fiber, cables, and software.
Fair enough. And what would be the relation that we getting in terms of the optic fiber? Market relation of the optic fiber cable.
Cable is, as we've maintained, cable is a function of fiber, so it's at a margin of the same 13-14%.
So in terms of realization, would it be right to assume $18-19?
Yeah, it's about 18-19. You're right. It's about 1,000 plus.
Fair enough, sir. Thanks a lot, sir. Thanks for those clarifications, sir. Yeah.
Thank you. We will take the next question from the line of Varun Agarwal from BOI AXA Mutual Fund. Please go ahead.
Hello. So congratulations on good set of numbers. So most of the questions have been answered. One question I wanted to ask is, in 2018 and probably you will look for renegotiation of contracts for our product businesses. So wanted to understand, can this, will it help in improving our margins going forward? Or, we'll keep same range?
Well, it's just a range-bound negotiation both on volume and pricing plus minus 10%. So based on how supply-demand situation starts looking at the end of 18 for 19, so the negotiation is in a tight range.
Okay. And also, second question on the BharatNet.
About the Indian telcos, we have, sufficient orders can come in next couple of years. In terms of BharatNet, what kind of visibility is there in terms of BharatNet?
We take, Varun, a step at a time. So the positive is the fact that the cabinet has approved BharatNet Phase 2. As we said, between Jan through June, there will be several contracts on the centralized, decentralized product services tenders. And we'll keep on updating. So currently, the step that has been taken is that the cabinet approval is there. There is a great amount of urgency in trying to build that network by March of 2019. And there is a high level of activities in terms of releasing the tender. But as soon as there is something more material and concrete to report, we will do that.
Okay, thanks a lot for that. One last question. We're taking our fiber capacity from 30 to 50. So, just wanted to understand if it definitely will result in better ROE incrementally because, more revenue is expected to come from our fiber segment. Then. Is it right to you?
We focused on ROC and we focus on ROC maintaining closer to 25% or so. So you're right, with greater capacity utilization, the ROC would be high.
Okay. Thanks a lot and all the best.
Thank you.
Thank you. We will take the next question from the line of Tejas Sheth from Reliance Mutual Fund. Please go ahead.
Good evening, sir.
Good evening, Tejas.
Sir, on the pricing side, again, sorry to keep...
Tejas, you'll need to be a little loud.
Hello, can you hear me?
Yes, thank you.
Yeah. So these contracts on the pricing side are for what, 1 year, 2 years or 3 years?
They just volume contracts and the price contracts typically are like right now we are seeing between 2 to 3 years.
Okay.
The first year the pricing is certain. The second year and third year the pricing and volume can be negotiated in a range.
Okay. And typically, let's say this 480 million of FKM which was there in CY17. Assuming that there will be obviously growth in coming years, what part of the global supply would be this contract based and how much will be on the spot side?
We don't do any spot. For us, bulk of the contracts are currently, so as we said, exports is about 60-65%. Bulk of the exports currently are in Europe and China. And the order book is also a reflection of our deepening presence in those geographies. There is definitely some kind of newer customers that we have developed in Middle East, in Latin America, etc. But bulk of the contracts are in Europe and China.
No, sir. Actually, I was trying to understand the global supply. How much of that would have been tied up in terms of contracts?
It's very difficult to say that. It's the industry. Nobody reports how much supply has been tied up.
Okay. And let's say in our last 12 to 18 months of this contract negotiation, how has been the tying up when the client really negotiates? I mean, is it more on the buyer's market or it's more of a seller's market right now?
So it's a supply-demand situation. See, for us, the focus has been more and more getting into tier 1 accounts, more and more getting into longer-term contracts. So there is a healthy discussion. As we maintained, we are not in the spot market. So for us, we are using this opportunity of supply-demand tightness to get into more marquee clients, to get into more tier 1 clients, and there is a mutual respect between both the buyer and the seller.
Okay. So lastly, you mentioned this number of 22% of value-added contribution to the fiber. What was this couple of years down the line?
It was in single digits, low single digits.
And the industry levels at what level?
Again, very difficult. If we see the CRU data, this number at a global level would be about 9 or 10%.
Okay, so we are much ahead of the market. Okay, great. Thank you, sir.
Thank you. We will take the last question from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi. Congratulations, sir, for a very good set of numbers.
Thank you, Vipul.
Yeah, I just want to know at the end of our expansion, what will be the contribution of value-added products in terms of percentage, which is, you said 22-23% right now?
I think we'll maintain at this kind of level. As we said, that this is again much higher than the industry averages. But look, this is an industry in which the spec keeps shifting. So we would continue to be at the leading edge of changing the spec. And if it is between 20 to 30%, we'll be happy.
And sir, lastly, what is the blended realization we got for fiber and cable in this quarter? You gave those numbers, but I missed it, unfortunately.
Fiber was closer to 8.5, and cable was between 18 and 19.
18 and 19 for how many fibers?
No, it's $1 per SKM, cabled SKM, and maybe that detail and how we do that, if you can get in touch with our IR, that might be better.
Okay, sir. Thank you and all the best for the future.
Thank you very much. I now hand the conference over to Dr. Anand for his closing comments.
Thanks. I would once again like to thank everyone for attending this call, and I hope we were able to address and clarify your queries and comments. For any further clarifications and discussions, you can feel free to contact our investor relations team, which includes myself and Anupam. And we hope to continue our association and dialogue in the future. And I thank all of you for showing your interest in the company. Thank you and good evening.
Thank you.